Well, good day, traders. A new week, new opportunities. We've got the midterm election results. We know that there's a split Congress and there's still a lot of questions obviously being asked and how this all means for fiscal policy going forward. But certainly that's now somewhat in the rear-view mirror and we can move on to the week ahead. And I think if you look at the big picture situations, one issue we're obviously very focused on is what happens in the US crude price, Brent prices. Yeah, I think you look at US crude on Friday, it did drop below 60 bucks. It's had closed back above that level, but all the talk now is what happens as we go into the 6th of December OPEC meeting in Vienna. The idea that we've got the US, we've got Russia, and we've got the Saudis all running record production at the moment in terms of the output. Has seen the oil price coming under pressure. And of course, if you look at the inventory numbers in the US, they've been pushing up, not just because demand's been pulling back, but because there is a supply issue at the moment, which has been balancing that equilibrium and pushing the price down. So definitely if we go into that meeting, the cries of output cuts are starting to grow. We've already seen the Saudis floating the idea that they may look to restrict exports by some 500,000 barrels a day. The Russians have said whatever happens at the OPEC meeting, they'll be very much on board with at the moment. So something we are watching is if we can see a reversal and some stabilisation coming through the crude price, because people are talking bear markets. That's obviously not good for semantics. But I think as we go into that meeting, the idea that we could see a reversal in price as people are pricing the idea of a more stable setting from the OPEC nations and also from Russia is definitely something we're watching, especially if you're holding and trading the Canadian dollar and also the NOK. Some of the petro currencies will be very sensitive to any kind of reversal or whether this bearish trend continues. So I do think, from what we're watching that very closely, and as from someone who watches the bond market very closely as well, the idea that inflation expectation through the break-even rates have been falling fairly sharply is also something that we'll be watching as well, because in theory that should see the market pricing out rate hikes in the US, because we know that the Fed do look at inflation expectations in the bond market fairly closely as well. I think if we keep on the political theme, then I believe we have to keep an eye on what's happening in Brexit and also what's happening in Italy. We do know that Italy this week will see their budget being looked at and scrutinised by the EU, and whether they give their stamp of approval is yet to be seen. There's still a lot of cynicism that they can reach that 2.4% of GDP, which is what they've detailed for this year, and I think more likely that we're going to get to something like 2.9%. In Brexit as well, we'll be focused very much on headlines. There's been a lot of talk on Friday that the DUP party are not on board with anything that Theresa May's promised, and I think actually she's the headlines from the Times newspaper on Sunday suggesting that the EU are walking away from any kind of constructive dialogue. We look like we're back to square one in the situation here. In fact, we're actually probably further away in the sense that the EU are not on board with Theresa May. The DUP party are not on board, and also we're seeing some number of Tory MPs looking to resign as well. We saw that from Joe Johnson, and there's talk that another 4 Tory MPs may walk away as well. So it really looks like we're moving further away from any kind of resolution and closer towards a hard Brexit. And it's very difficult to be long the pound, any kind of conviction in that situation. Although I do believe that the trade continues to be to look to fade sterling or cable into 132 at the moment. If you look at that on the weekly basis, that seems to be the issue. I do still believe that we are going to see a deal of sorts. I believe we will see a compromise between the EU and the UK and Theresa May's government there and Dominic Raab, who's negotiating that. But at what price? And will that actually get through the Commons? I think there's a very low chance at this point that we are going to see it in its current state being pushed through the Commons. And therefore, I think any kind of relief rally in the pound will probably be sold into and will offer a very good opportunity for that point. And I think we will see higher volatility in the pound coming through. I think if we go into the US, of course, the big issue there has been the US dollar. We've seen funding rates going up in the US. The cost to get US dollar funding has been expensive. But we are making another play at the August double top that we've been seeing of a break of that double top on the US dollar index. And of course, that will extenuate any kind of pressure on emerging markets, which really don't need that issue at the moment. So definitely we are watching what happens in the dollar, and there's plenty of event risk this week there. We do keep our eye on Thursday morning at 10 o'clock Eastern Daylight Time. In Asia, we get Jerome Powell, the Fed governor, speaking, and he will give his view really on what's happening on monetary policy. Now, there are some cracks appearing in some of the more forward-looking indicators, the rate-sensitive part of the economy. Of course, you've seen housing under all sorts of pressure recently. You've seen autos, not just in Europe, under pressure, but also what's happening in the US as well. So very rate-sensitive parts of the economy have been struggling to those higher real and nominal rates in the US, and that's something that we will be keeping an eye on firmly throughout this week in terms of Jerome Powell's view there. We also get CPI numbers coming out this week in the US, and the market's looking for headline at 2.5%. They're looking for core at 2.2%. Given what we saw from PPI on Friday, if we do see that headline number coming out at, say, 2.6, 2.7%, that could be the catalyst to push the US dollar through that resistance level that we spoke about there as well. We've also got retail sales numbers. The core aspect of that is having a look at the so-called control group. That's the element of goods that go directly into the next GDP calculation. And I think, we are seeing signs that GDP numbers have peaked, 4.2% in Q2. We're seeing that at 3.5% for this quarter, and whether or not that comes lower or higher, I think will largely be influenced by the control group there as well. So definitely something we're watching. If we are focused on growth, then have a look at what's happening midweek in Germany, because we're going to see their GDP numbers come out. And the consensus is actually we could see a slight contraction in growth of 10 basis points. This is the engine driver of Europe. And we're focused on a situation where we could see a contraction in GDP. When that comes out midweek, then we start talking about the recession word. When we get their Q4 numbers, will that bounce back modestly, or will we actually see a second quarter of negative growth, which puts Germany into a technical recession at a time when we're trying to see the idea about who's going to lead the CDU party going forward as well. We stay on the growth thematic, which we're focused on what's happening in China. There's been a lot of focus on the fact that the banks are now being told to lend as a specific element of their new loans to private companies. They didn't do this in 2008 during the big stimulus. They're now asking companies to do that now. Does that show a sign of desperation? Perhaps, but we were watching the credit figures which are released through this week. There's no set time for that. I want to have a look at the M2 money supply numbers. Again, we're expecting that to come out about 8.4%. So the idea that the banks are now turning the credit taps on and going away from deleverage is something that's real. But we'll also keep an eye on midweek on industrial production numbers, retail sales and fixed asset investment. Not expecting that to be a huge driver unless that has a big downside miss, in which case that could reverberate across all asset classes there. And also, I think we need to keep our eye on data coming out of Australia. We've got the wage data coming out midweek. Now, the RBA obviously look at that pretty closely, and that's expected to increase by about 20 basis points on the quarter. So again, the idea is that we're seeing very weak wages in Australia. If we do start seeing them tick up, that could be something for the bulls going forward at a time when the Aussie dollar is breaking its longer-term downtrend, and we're seeing that playing through. My objective here is to wait for a move above 73 cents. At the moment, we've got it trading in a range of 73 cents down to 70.5. I think probably that range stays in place. But if we do see some good wage data, and then Thursday we get the unemployment numbers, if you get another really strong read in terms of job creation there, and that unemployment rate actually stays fairly flat, then you could see the Australian testing the top end of that range at 73 cents. A break of that level, then we're talking about 74.5 cents, which is actually the 38.2% retracement of the January downtrend playing through. So, a break of 73 cents would be very interesting. I'd expect traders to look to fade into that. But again, we've got big picture. We've got what's happening Brexit, what's happening in Italy, what's happening in oil, what's happening with the US dollar. Jerome Powell, how will he see and give his assessment of the US economy at the moment? There's a lot to look out for this week. We're keeping our eye firmly on volatility readings as well.